Now let's move into today's important Iraqi dinar and banking story, because the latest information circulating around the Central Bank of Iraq involves two very different messages that deserve to be examined separately. According to the information provided for this report, the Central Bank of Iraq published two documents on Wednesday. One was directed toward the general public and addressed claims surrounding the printing of new currency. The second communication was reportedly distributed to licensed banks and financial institutions, focusing on how financial institutions should handle transactions involving politically exposed persons, commonly known in the financial industry as PPs. Before going further, it is important to make one distinction very clear. The information we are analyzing today comes from the supplied report, and individual claims should not be treated as independently confirmed facts, unless they are supported by an official central bank publication or another authoritative source. That distinction is especially important in currency discussions, where rumors about new notes, exchange rate changes, or monetary reforms can spread very quickly. The first part of the reported communication is relatively straightforward. The central bank is said to have denied that any new currency has been printed. For Iraqi dinar followers, this is significant because rumors about newly printed notes can sometimes be interpreted as evidence of an imminent currency change, but a denial that new currency has been printed should be understood on its own terms. It does not automatically indicate that a revaluation is coming, that a new exchange rate has been approved, or that a redenomination is about to occur. It simply addresses the specific questions of whether new currency has been printed. This is an important point, because currency printing and exchange rate policy are related to monetary management, but they are not the same thing. A central bank can change its monetary strategy without immediately introducing a completely new physical banknote. Likewise, the existence of new banknotes would not by itself prove that the currency's international exchange rate was about to change. The second reported document is where the story becomes more interesting from a banking and financial compliance perspective. According to the information provided, licensed banks and financial institutions received instructions concerning politically exposed persons. In international banking terminology, a politically exposed person is generally someone who holds or has held a prominent public position, along with certain family members and close associates, depending on the applicable rules. The purpose of enhanced scrutiny for politically exposed persons is not automatically to accuse those individuals of wrongdoing. Instead, financial institutions generally apply stronger due diligence procedures because senior political positions can create additional risks involving corruption, conflicts of interest, bribery, misuse of public funds, or unexplained wealth. Banks therefore need systems capable of identifying customers who fall into these categories and assessing transactions according to applicable anti-money laundering and counter-terrorist financing requirements. For Iraq, this type of banking instruction matters because the country's financial system has been undergoing a broader process of modernization and international compliance. Iraq's banking sector has faced long-standing challenges involving correspondent banking relationships, transparency, foreign exchange controls, cash dependence, and compliance with international financial standards. Strengthening procedures at the level of individual bank counters may appear like a technical development, but these procedures can have much broader implications for the credibility of the financial system. Think about what happens at the practical level. A banking regulation is only effective if the bank employee handling a transaction knows exactly what information must be collected, what questions must be asked, when additional documentation is necessary, and when a transaction requires escalation. That means financial reform is not limited to announcements from senior officials. It eventually has to reach the branch level, where actual transactions take place. This is why the reported communication concerning politically exposed persons could be more significant for Iraq's banking reform process than the currency printing rumor itself. Stronger customer due diligence can help banks create a more transparent financial environment. It can also help authorities identify suspicious transactions and improve the traceability of funds moving through the formal banking system. For Iraqi dinar followers, the key questions is how this connects with the currency itself. The answer requires patience. Banking compliance improvements do not automatically translate into an overnight exchange rate adjustment. However, they can contribute to the infrastructure required for a healthier and more internationally integrated financial system. One of the biggest challenges facing Iraq's monetary system has been the large role of cash outside formal banking channels. When significant amounts of currency circulate outside banks, financial institutions have less visibility into economic activity. Regulators have fewer tools to monitor transactions, and it becomes harder to build public confidence in formal banking. Encouraging people and businesses to use banks more extensively is therefore an important part of financial modernization. The figure of 102 trillion dinars, mentioned in the supplied report, is also something that deserves careful treatment. The report appears to connect this figure with the broader monetary and banking discussion, but the information provided does not fully explain whether the number refers to currency in circulation, a specific monetary aggregate, deposits, liabilities, or another measurement. Those distinctions are extremely important. In monetary economics, a large number attached to the Iraqi dinar can mean very different things depending on what exactly is being measured. Currency outside banks is different from total money supply. Bank deposits are different from physical banknotes. Government liabilities are different from private sector liquidity. Therefore, viewers should avoid assuming that a figure such as 102 trillion dinars represents a specific pool of cash that could suddenly be exchanged or repriced. This is also where the discussion about deleting zeros needs to be handled carefully. Iraq has discussed currency reform and redenomination concepts for years, and the idea of removing zeros from nominal values is often mentioned in Iraqi dinar communities. But deleting zeros from banknotes is an accounting and currency denomination process. It should not automatically be interpreted as creating wealth or multiplying the purchasing power of existing holdings. If Iraq were ever to undertake a formal redenomination, the central bank and government would need to communicate detailed rules concerning old notes, new notes, conversion ratios, accounting systems, contracts, wages, prices, banking software, taxation, and public education. Such a process would be much broader than simply announcing a new exchange rate. In the short term, therefore, the most important takeaway from today's information is not a predicted new dinar rate. It is the continued emphasis on banking controls, transparency, and compliance. If the reported instructions are genuine and implemented effectively, banks could become more consistent in identifying politically exposed customers and evaluating transactions involving potentially unexplained wealth. That could have a positive effect on confidence in the formal financial system. It may also support Iraq's efforts to improve relationships with international financial institutions and correspondent banks. But again, this is a gradual process. Financial system reform usually produces results through accumulated improvements rather than one dramatic announcement. For the Iraqi dinar itself, short-term exchange rate expectations should remain grounded in official monetary policy. Investors and currency holders should watch the central bank's published exchange rate framework, official monetary statements, bank on reforms, foreign exchange regulations, inflation developments, reserves, government fiscal policy, and broader economic conditions. Those indicators provide a much stronger basis for analysis than social media claims about secret rates or imminent currency events. Looking further ahead, Iraq has significant economic potential because of its oil resources, its population, geographic position, and opportunities for investment and infrastructure development. But translating those advantages into stronger currency fundamentals requires sustainable fiscal management, diversified economic activity, functioning financial institutions, reduced corruption risks, and greater confidence in the banking sector. A stronger banking system could ultimately make the Iraqi dinar more useful inside Iraq because people and companies would have greater confidence in holding and transacting through regulated financial institutions. That is an important foundation for any future monetary reform. At the same time, viewers should remember that a currency's international value is determined by economic and monetary conditions, not by rumors alone. There is no responsible basis for guaranteeing a specific future IQD exchange rate simply because a new banking instruction has reportedly been issued. The reported denial concerning new currency printing is therefore one part of the story, while the reported banking directive concerning politically exposed persons is another. The first addresses the physical currency narrative. The second relates to financial system governance and compliance. Combining the two into a guaranteed revaluation story would go beyond the evidence provided What we can reasonably say is that Iraq's financial sector continues to face pressure to become more transparent, more compliant, and more integrated with international banking standards. If those reforms continue, they could strengthen the foundations of the Iraqi financial system over time. But the timing and scale of any future currency policy change remain decisions for Iraq's monetary authorities and government, and those decisions should be evaluated through official announcements rather than speculation. So, for Iraqi Dinar followers, the responsible approach is simple. Watch the Central Bank of Iraq, examine the actual documents, understand the difference between currency printing, redenomination, and exchange rate policy, and avoid making financial decisions based solely on unverified claims. We will continue monitoring developments involving the Iraqi dinar, Iraq's banking reforms, monetary policy, financial compliance, and the broader economy, while separating confirmed information from speculation. If this update helped you understand what the latest banking developments could mean for the dinar, make sure to subscribe to Iraqi Dinar News and stay connected for responsible and factual updates. Thank you for watching, and remember that currency markets and monetary policies can change. So always verify important information through official sources and conduct your own research. This content is provided for informational and educational purposes only and is not financial advice.